We're probably live on like one of them right about now. It's still doing its thing.
Yeah, I just want to shut off my phone so you can't hear it.
Oh, that would probably be a good idea. All right, so yeah, we are live. Check that out. So thanks for being on, Bill. I appreciate it.
Hey, no problem. Thank you for having me again.
Yeah, actually, a couple weeks ago, or actually, was it last week that I had stopped by and said hi real quick? It was kind of neat.
Yes, you came down to Florida, which was nice.
Yeah, we were in Florida, and unbeknownst to you, like the day after, my brother-in-law, he ended up having a heart attack. So it was like, wow. Yeah, he's like younger in age, has some, medical problems, whatnot. So he's been in the hospital for a while. We're kind of freaking out about that.
Wow.
But just kind of goes to show, like, how I was talking about how hot it was at the beach that day. I think that was like a contributing factor. It was scary. So anyway, today I was going to be asking you when it comes to how infinite banking can help our people that are within the real estate industry, like realtors and brokers and mortgage peoples, and I was going to just ask, like, specifically for the realtors and the mortgage brokers. I know that they have a wonderful windfall going on right now. I mean, the market is hot. They're making probably good money. But when other times hit, kind of like with 9/11 or COVID and other instances, where the market kind of dries up, can help them.
Yeah, well, what probably was going to happen is the prices of real estate right now is going through the roof. People are paying anything to escape from wherever they think they need to go somewhere else. So there'll be times that, they'll be scrambling. But yeah, normally what happens, I deal with real estate agents, and their problem usually is they don't like to show people properties if the person doesn't have a pre-qual letter. They have, so otherwise they're just driving around. So they'll ask them if they have a pre-qual letter, and what usually happens what happens sometimes, I should say, they'll send them to get a pre-qual letter, and they might not have bad credit. It's just that their DTI, which stands for debt to income ratio, is too high. So since it's too high, they can't get the pre-qual letter. And I ask them, well, what happens to that client? Where does that client go? And they'll tell me, I never see him again. So I always tell them that you can tell them if they have a problem to come back to you. If you can send them over to us, Karen and I, we can help them with that. And if we adjust their debt to income ratio, it's not going to happen in a month, but in a couple of months, we'll send them back to the real estate agent. So they've recaptured a lost commission, possibly, if they can find the property for them. And what I always say to them is, don't you think that these people have friends in the same position? And they're going to, if they invite them to the house, they're going to say, hey, Jim, how did you get this house? Your credit was worse than mine. And, there's a possibility that you can get 3 or 4 more sales, because obviously the friends is going to recommend that real estate agent, and we can do the same procedure over and over. So I hope that answered your question there.
It kind of did. I for myself personally, when we first came up to the Irmo area, we got like an Airbnb, and we talked with like a realtor that has like one of her properties that she's kind of renting out. And I reached out to her recently because we're in the process of moving right now, and it's just like, it's so hot that when you apply for something, somebody's already gotten it, and that's just, whether you buy or whether you rent. I mean, it's just like we're kind of freaking out with that. So, I reached out to her saying, hey, do you know of anybody that's kind of like off the books, that are owners that are, looking or whatever? And we had that conversation. And then I let her know, I was like, listen, I can help you out when it comes to, just like you said there, if people have like high debt to income ratio, basically we can, help them with kind of getting back on track. And so for her or for others that would kind of be like kind of interested, how does that work? Because I know that she was asking a whole bunch of questions. I mean, we don't necessarily go into like their credit files and look at like the credit bureau credit scores and stuff like that, but I know that we can help them out when it comes to bringing up um, their credit score. So for somebody that's brand spanking new, that has just heard about that is like a realtor, how would you explain that to them where they would get it? I know we've kind of already kind of gone over it, but if you could kind of explain it to them like that way, like, how does this work?
Well, I don't really understand the question. You're saying explain it to the realtor how
Yeah,
it works?
yeah. So basically, okay, I'm the realtor, and I'm considering giving that over to you, but I'm kind of hesitant because I've never heard of the program before.
Okay.
You know,
Well, I mean, what I always tell realtor, actually, I tell everyone, is the best thing they can do is to get an education. So, what I always try to do with people before I speak with them is I'll send them or get them to read Nelson Nash's book, Becoming Your Own Banker. Because if they educate themselves and they have an understanding or a better understanding of the concept, then it's a lot easier for me to explain what's happening because it's not all new. So that's usually what I try to do. And I don't know if you said this woman had several Airbnbs.
well, I mean, it was just her, but I mean, she's in the real estate industry, so I know that she has clients that come in with high debt to income ratio and that they need help. And so I let her know. I was like, hey, we can help get them back on track. We'll be more than happy to pass them back your way and kind of move along. Ended up doing was just kind of showing one of the previous videos that we had done, where she could kind of get an idea as to how it worked. But Nelson Nash, he did a much better job in explaining it.
Oh, yeah, yeah. Well, it's the same thing. It's they're essentially losing a client. And again, they might. It's not that they have bad credit. They may have. Well, I shouldn't say bad credit. They may be paying their bills. Everything's fine, but their debt to income ratio is too high. So we have a way of doing it rather quickly. Obviously the person has to have some discipline to follow the plan, but one, they'll accomplish their goal of getting in a property. The real estate agent will accomplish their goal of selling the property. And then if the person stays with the plan, they're going to be able to eliminate that mortgage in less than 9 years, plus all the other money they spend furnishing the apartment. So, it's a win-win for everybody.
Awesome. So if we were to kind of like, put it into like different steps, okay, so this is the first step that we would recommend. And then this is kind of like what's going to happen after that. Basically, the first step would be, hey, feel free to pass them our way. We'd like to, share with them, the book Nelson Nash had written so they can kind of, get a better idea as to what's involved with it. After that, we're going to have them basically provide us the information specifically what their needs are, right? What would be the following step after that?
Well, once they come to us, say they send a client to us, as you understand, Karen works with me. So we will talk to them usually first, and then we'll send out a data gathering form. We'll email it. We can send it through email or on the phone. It'll take them maybe a half an hour. We want to find out where they're at currently. We're not asking for their account numbers, but we're asking for their account data. So how much do you owe? How are you paying? Are you overpaying, trying to pay it down, which a lot of people do? So when we get that, then we have a better idea, because it's not a one size fits all. everybody is different, so we have to handle each case differently. Then we, as we've shown in the past, we'll run what we call a big picture report. And then we explain it to the client because it's kind of easy for them to see because it's their numbers. And we explain to them, how to pay it off. Karen keeps in touch with them. We've learned over time that we think people understand it, but then we've called them and they go, oh, I paid those credit cards off, right? I just had somebody tell me I took a loan and I paid those off. So now they have another loan. So, we've just found if we keep in contact with them and we educate them how to be their own banker and how to do it the most beneficial way for them, once they get it, eventually they don't need us to do most of the things. They'll just call us from time to time to get like a strategy session on, we've had people had bad credit, they buy a house, they pay off their house, they pay off their car, they pay off their credit cards, and now they're looking to buy rentals. It just takes discipline and time. But everything we do, as I told you, is guaranteed. So.
Yeah, but and part of the kind of focus in with that big picture. I mean, basically with that big picture, and as you're discussing it with the client, everything's guaranteed, everything's in writing. You know specifically if you're keeping up with the payments and you're disciplined, that at this specific date you're going to have pretty much everything taken care of. You know what's going on. And I think that's I think that's very important. From my end, I'm very much like a numbers guy, and to me, numbers really don't lie. So when they sign on that dotted line, you might say they know what they're getting into. I had worked at a consult or at a credit restoration company many years ago, and what they had done basically was they would, and I think this works out with many credit restoration companies, is that they will call into like the creditors and say, hey, this is XYZ company. Can you lower the interest rate or lower the payments for the the debt that they have. And so they would do that for each of those debts, and then they would charge per debt type thing, and eventually everything gets taken care of. But education is very important, so they're,
well, it's great because the credit repair companies do help them, but again, you're relying on a third party for help. A lot of it they can do themselves. It's just financial literacy, which we have never been taught in schools. And it's relatively simple. It's just if you meet people and they're under stress, sometimes it's a little more difficult. If they come sooner, they're a little stress free. They can think it through. But like I said before, everything we do is guaranteed. It really is just the client following the plan, and we understand that sometimes things go south a little bit. They might lose their job. Coronavirus hits. Something happens. There is a way that they can, reduce the payment. It's their bank, so we can adjust certain things. And then there's also times where things get better. So if people maybe they get a nice tax return or they get some kind of windfall, then it can speed up paying everything off. And once everything's paid, the stress level goes away.
It goes down. That's for sure. I just drew a blank.
I'm sorry.
I just drew a blank. I mean, basically, it's very nice to see how it can help. I mean, here's the question I was going to ask. So, like, for the time span, more or less, I know it all depends on each of their individual circumstances. Would you be able to say more or less if it kind of like speeds it up by like half, the time, or is that kind of like too broad?
Well, for example, if they have a mortgage, it depends how many years they're out, but it's way more than half. Usually it's about a third, 35%. They'll pay things off in 35% of the time. We always tell everyone they'll be able to pay their mortgage, student debts, any credit card debts, auto loans, things like that, essentially in 9 years or less. And they don't have to dig into their pocket. In most cases, we are able to adjust the way they're making payments and use their money more efficiently.
That's nice. That's really all the questions I had for today, Bill. you know, but it was interesting because like yesterday, last night actually, I talked with like a young couple, and because I have like two different companies, or two under umbrellas that I'm under, your family bank, and then I'm under Equus Financial. And so with Equus Financial, basically, I have that agreement where I'm not going to compete with them with the leads that I receive and so on and so forth. The couple that I met last night, I was just gritting my teeth because it's just like I know infinite banking could help them, with their situation. A young couple, they have decent money coming in because of decent positions, but she has like 200K when it comes to student debt. He has like 35K when it comes to student debt. Now they have a brand new home, so that's easily $500,000 right there that they owe. And it's just like I know that infinite banking could help them pay that off so much faster. For those kind of situations, I mean, you said like about a third of the time or so.
Yeah, well, just let's take their mortgage. They just got a mortgage. They're gonna pay that off in 30 years or longer, like most people. Because what happens is they'll refinance or they'll move and they get another 30-year mortgage. So, we always say we own this house, but essentially the bank owns the house, because if you don't make the payment, you'll find out how long you own that house. And people look at the annual percentage rate, the APR. I don't call it APR, I call it the average person's ripoff rate, because that 4 or 5% is really just a selling method by the banker or the lender. You really need to look at your interest payment and the principal that's being paid down. Take out the taxes and the insurance, set that aside, because that you have to pay. But when you make a mortgage payment, you'll see if you have a 4 or 5% annual percentage rate on your mortgage. The first year, if you take how much you pay and you pull out the interest, for example, a 4.5% interest rate on a $200,000 mortgage is about a little over $1,000. So you're going to pay roughly about $12,000. But like over $8,000, almost $9,000 is going to interest. So that's like 83% the first year. So how is that 4%? There is no 4%. You really have to run the numbers yourself. Don't listen to the salesperson. I tell people when they come to me, I know my stuff works. I know it's guaranteed. I know I'm telling them the truth. I don't know who they're going to talk to after me. And I tell them the same thing. Don't believe a word I'm telling you. I want to get them in the habit to run the numbers themselves. We tend not to do that. We tend to listen to salesmen, advisors, and we trust them. And I'm not saying that you shouldn't, but as Ronald Reagan always said, I trust but verify. The more you know, the better it is for you. Wisdom and knowledge, what do they always say? It's power. Don't rely. That's the most important thing in life. And I hear all the time, I don't want to read a book, or, I don't really read. But, if you're going to buy a car, people will do all kinds of investigating. You're going to go on a vacation, they have it all mapped out every hour, where they're going to eat, what they're going to do. And then the most important thing is their finances. And you don't want to read a book that'll take you maybe just 2 or 3 hours. You don't want to listen to an audio that'll be 2 hours. And it'll change your life. You'll be able to go on better vacations, buy better cars, bigger houses, because you'll be in control of your financing. The question is, in what we do, who controls the banking function in your life? It has been taken over by commercial banks, and it has enslaved us. If you can control the banking function in your life, you'll be able to control the flow of money, which currently is going away from you. It'll start coming back to you because you will start to own your own debt. And it'll make a huge difference in your life. Because just think of all the interest that you're paying to somebody else. You'll be able to put that back in your pocket. Just think of what kind of retirement plan you're going to have. And this retirement plan, if you need the money at 54 years old for something, a daughter's wedding, or maybe you want to go on a cruise and you need $10,000 or $20,000 for something, there's no penalties and there's no interest because the money grows tax deferred, but you can use it tax free. And if you do happen to pass on before expected, your family is going to get multiples of the money that you have in there. They're going to get that money tax free, that they can still live where they're living and reduce the stress level of what am I going to do. I just had a client pass away, and his wife said to me, if I didn't get this money, I don't know where I'd be. So, that was a nice thing through the misery.
That's for sure. And so, kind of going back to like that couple, that had like, we'll say $600,000 of debt, if they were enrolled into the program, basically now they would have saved like a good, 400,000 maybe?
Oh yeah.
200,000.
Yeah, they would have saved, a lot of the interest, all the interest is up front. So when I run reports, and it doesn't matter if the person makes a lot of money or a little money, because you're going to borrow and you're going to be able to get loans based on your income, so the percentages are all the same. Anywhere from 30 to 45% of their debt indebtedness, the payments that they're making out, 30 to 45% of it is interest. Just think if you didn't have to pay that, your payments are going to go down 70%, 60%. That's what you're going to pay. Instead of paying $10,000, you're going to be paying $7,000. Instead of paying $6,000, you're only going to, instead of paying $10,000, you're going to pay $4,000. There's a lot of money that can be saved.
So that just kind of put a light bulb off of me. So I know that with realtors, I mean, they have like, and mortgage brokers, I mean, they deal with hard money lenders, they deal with, investors. So obviously this could help them as well. I mean, I know that they are book smart, that they have, read a lot of books. But oftentimes, or maybe not oftentimes, maybe some of them just don't know about how this could help them, in regards of like, saving on the interest. I mean, you had shown an example a while back, I guess, like on a piece of napkin to one of these guys, that was investing. And just like with, $200,000 and then, flipping a house for like $100,000. He was, how much money was he like, saving when it came to like taxes and interest? I mean, I don't remember offhand. I don't know.
Well, the thing is, when I run it, it depends. Everyone's different, like I said. But, when I run it, I'll ask people, what's a good return? And they'll give me a number. I use an example of an investor that was making, he's a 20% return. And I showed him, because people don't realize how much return banks make on their money. And I showed him how he could make, instead of a 20% return, which was his return. And, he said, well, I do this 4 times a year with the same 100,000. So that's an 80% return. I showed him how he could make a 1,600% return doing what banks do. And the easiest and quickest way to say this to you, I'll just use the one example, which we've talked about in the past. If you have 30,000 in a bank, and they pay you, the standard interest right now is 0.4%. So you put 30,000 in the bank, 0.4%, they're going to pay you $120 interest at the end of the year. If you go to that bank because you need to buy a car, or whatever, you say you needed a car, and everyone tells me they don't want to use the money they have in the bank because that's their safety net, I'm going to take a loan. So if you did borrow 30,000 from the bank and you had 30,000 in the bank, are they going to charge you the same 0.4% interest? No, they're going to charge you 5, 6, 7%, whatever. So if they charge you 5% interest, you're going to pay them $1,500. You're only getting $120 on your 30,000. You're getting $120 from them, taxable. You're paying them $1,500 after taxes. So the numbers are actually worse. So the question I always ask people, what is the bank's investment in this deal? It's not the 30,000 because they don't have it. In this case, it's your money. It could be somebody else's money, but let's assume it's your money. Their investment is only what they're paying you, which is $120. So if they're paying you $120 and they made $1,500, what is their return? Take the $120, divide it into the $1,500, it's a $1,250 return. If they charge you 8%, it's $2,400 you're going to pay them. Divide 1,200 into 2,400, it's a 2,000% return. When you become your own banker, you can do the same thing that banks do, with one exception. You can't create money out of thin air, which banks do. The other thing people don't know is every time you go to a bank and you get a loan and you sign that paperwork, we use an example where you borrowed your 30,000, but 9 other people can come in that bank and borrow the same 30,000. There is no money. Where did the money come from? It's created by your signature. It's created out of thin air. We're all complaining about inflation. Oh, prices going up. Well, prices going up is the result of inflation. Inflation is created by us going to the banks and borrowing and them creating the money out of thin air. Because like in anything else, when there's more of something, the price goes down. When there's more money on the street that got created out of thin air because of fractional reserve banking, that means there's more money, it's worth less. That is an unfair tax called inflation. The rich people can afford to pay a little more for that $30,000 car that now costs $33,000. The average person can't. They have to buy a smaller car. And we don't realize it because we haven't been told that. But just go start looking up what fractional reserve lending is. You will get sick. Banks they'll take your house, they'll take your car, they'll sue you, and they have absolutely zero invested in the deal. They will hound you. If something goes wrong in your life, and we can't predict the future, things happen, coronavirus hits, we lose our job, we get sick, we get hurt. The banker, your friendly banker, when you can't pay, they don't care. But if you become your own banker, you can show some mercy for yourself. When you borrow from your own bank, we call it, you're not taking your money out. You're using your money as collateral. When you take the money out, there is no repayment schedule. You never have to pay it back.
But it works in your favor to pay it back.
Oh, it does. If you borrow from some other bank and you value their money at 4, 5, 6, 7, 18, 20, 24% interest, say with Capital One on a credit card, if you value their money at that, you should value your own money at the same thing. Problem is, people don't. Like, I use my own money. I use cash, but they don't pay themselves back. And their money is only working for them once. We can show them how their money works twice. It's going to continue to grow, interest and dividends, and they're still doing what they want. It's a mindset change. That's the hardest thing. I should have also got a degree in psychology, because that is the hardest thing to get people to do, to relax, read, and make a paradigm shift in their head that Financial advisors, they'll promise you huge returns, not guaranteed. I'm not a financial advisor. I teach financial literacy. Everything is guaranteed. The only thing that's not guaranteed in this process is you following the plan. But if you can follow it as close as you can, do more, it'll be better. Do a little less, it'll be a little less. But it's really, people say to me all the time, we've talked about this before, Stephen, this sounds too good to be true. Well, it's just what it is. How come I've never heard of this before? Well, the bankers aren't going to tell you. More and more people are becoming aware of it now because it's been out there. But you can get the book. The book is like $25 on Amazon. You can get it maybe even cheaper. It's called Becoming Your Own Banker. It was written by R. Nelson Nash. Read it. It'll change your life. There's another one, The Case for IBC. Very simple. They're very small books, but when you read it, you'll say, is this really true? Can this really happen?
Awesome. Bill, I thank you for your time, sir, and very much appreciate your input and your education. It's very nice. I appreciate it.
All right. Hey, and it was great seeing you last week. Did the kids eat the pizza? I can't hear you. I lost you. All right. Bye.